So the panel, what we're going to have for this panel here is talking about digitalization and particularly this idea of regulation, standardization. How can we spread the digital solutions which are out there, and how do they actually work in practice as well? I don't think there's really any question anymore, is digitalization occurring? Of course it is, but there are areas where it's advancing, there are opportunities out there, and also some disappointments, and I hope we can unpack that a bit today. So before we start, I wonder if I could just ask each of the panelists to briefly introduce themselves and let us know your connection to digital. So if maybe we can start with you, Andrew.
Hi. Yes. So my name is Andrew Coles. I'm Head of Solutions Consulting for Surecomp. Surecomp is a global provider of software systems for banks and corporates to manage their trade finance instruments, LCs, collections, etc.
That's great. Thank you very much. Next up, Rahul.
Yeah, hi. Good morning, everyone. This is Rahul. I'm the CFO for Olam Food Ingredients for Africa, as well as for Global Beans. And the finance function at our company is leading a big transformation drive all across through the supply chains. This is how I'm here.
That's great. Thank you very much. And Frank?
Yeah, I'm the executive chairman of FQX, which is a company that is specializing in digitalization of electronic negotiable instruments based on the model on electronic transferable records, in particular also at the moment Singapore ETA. We will talk about this, what this could mean for Africa. At the moment, we're just focusing on promissory notes, electronic promissory notes, completely electronicized. That's
great. Thank you very much. And Jack?
Yeah, hi, good morning. I'm Jack Bismohun. I actually work for GUUD Singapore, which is a portfolio company of XEO Japan. As a company, we enable digital trade facilitation by setting up ports, airports, community systems, customs and maritime single windows, logistics single windows, and e-marketplace. I've been involved in Africa setting up trade facilitation since 2003, collaborating with many African states. So I'm looking forward to our discussion.
That's great. Thank you very much. I think we have our the Avengers assembled to discuss digital. Well, as I said at the beginning, I think there is no disagreement from anyone that digitalization is happening, it's advancing fast, but there are areas where it's been more successful than others. So I wonder if I could bring up a poll, poll number 1 to start this, and this is to everyone, in-person delegates and also everyone online. A real question here. In which area have you seen the greatest advance in digitalization of trade and business in Africa? And the different options are, is it in payments? Is it in customs and duties? Is it in e-documentation? Is it client onboarding? Or is it traceability and compliance? I do recognize that these things cross over a bit, but where have you seen the greatest advance? Can we put up that poll on screen? Is that possible? Hopefully you can see that if you're voting online or also through the app. Oh, thank you very much. So just waiting for the results to come through at the moment. We're currently on 0 advance. Excellent, there we are. Interesting as well, what we're seeing so far, payments and payments e-documentation, absolutely. I think probably all of us would agree on that one when it comes to payments. Time for a few more to come in. Anyone else want to vote? Excellent, bit of a mix here. And that for me actually is sort of what I would have expected, but maybe if I can get some responses from the group as well. I'm interested to know what you think of the poll, but also, does it actually match your own experience as well? So maybe if we can start with you, Rahul. Do you think from what we see there, they're saying very much, it looks like payments is definitely where the most advance has been. Would that match your own experience of digitalization of the value chain?
So I will say number of payments, yes, but not the volume, not the value of the payments, definitely not. But in terms of the payments, I think Africa is doing really well. Mobile money has become a very large hit all across. In East Africa, it was started there, and then I think in West Africa also is coming up. So I think that was yes. But I will also say that client onboarding is also something which is quite going on quite well in multiple companies. In fact, also the SMEs, which I am seeing as a change now from the earlier times.
Absolutely, and I think that's obviously one of the biggest blockages that are out there. From your side as well, Henry.
So, Andrew, payments is no surprise at all. Globally, obviously, there's a huge trend around digitalization of payments. Very pleased to see onboarding, digitalization there. And again, we're seeing a great advance of that in certain areas across Africa. So no great surprises there, no.
Yeah, excellent. That's good to know as well. And Frank, from your viewpoint?
Yeah, payments, I think it's clear. We have still some topics in terms of exotic currency exchanges, clearly. Also some topics to actually going to KYC AML, where you have some bounce backs, but I think the advances are quite clear. On KYC and identification, obviously, it's still a journey. We're starting on this. There's a lot of momentum, in my view. So I can, and obviously documents, I think we have all heard of OCR and all the technologies, which are leading to the bridging technology kind of approach.
Yeah, great. And Jack, your views on this one as well? Were you surprised with the results of that poll?
No, I think I kind of agree with all the panelists on this point. I think payments has made a lot of progress, e-payments, especially in mobile pay. Now, however, in my experience, I've seen some neglects in the outskirts and hinterland areas. Unfortunately, these tend to penalize producers and manufacturers in that part of the country. But also on the customs and duties, I think there's been quite a big movement and advanced in implementing Resolution 33 of trade facilitation, at least the first recommendation, which has been implemented by many African countries. So that's a good sign.
Yes, thanks. Well, I think it's interesting as well that there are one or two issues which didn't seem to be picked up on too much there. And so I think it's all clear for all of us as well. We've all dealt with electronic payments, increasingly easy to do that. I guess some of the client onboarding, I don't know, I still think that's quite a big problem as well. But this is maybe what I'd like to talk about now is where are we seeing the real resistance when it comes to digitalization? Because it's not like there isn't a proof of concept. E-documents have existed for decades, right? An ability to approve things digitally has existed for decades as well. And it's getting cheaper and easier to do it. But there is some resistance coming from certain areas. So I wonder maybe, Andrew, from your perspective, when it comes particularly to digital documentation, KYC, what are the kind of problems there when it comes to digitalizing?
Well, I guess one of the key problems that I've noticed, and not just in this, but across all kind of digitalization initiatives in Africa and globally is again, it's not the technology, it's not the proof of concepts. We know it works, we know it can bring benefits. It's regulation, regulatory adoption, having a standardized approach and a clear mandate from the regulatory bodies that they will accept these digital technologies. And that really where, again, if we look at the myriad of technology innovation that's happening in the trade finance space, not just from a bank intermediary trade finance space, but across the whole spectrum, we're waiting for the adoption. We're waiting for that push forward. And again, Frank, I think you'll talk more about this, but I think one of the most exciting things that's happened recently has been the pledge for the adoption of the MLETR, the Melita standards around digital and negotiable instruments. And having that kind of regulatory weight behind a particular digital initiative is what the industry really needs. To push these digital initiatives forward.
It's quite interesting that, because that actually echoes back to an earlier panel as well today about this, the importance of having the political will out there. It's funny often that when people complain about regulations or laws, actually maybe what they're complaining about is the lack of correct regulation and laws, and that has to come from a government or a legislative body as well. That's quite interesting as well. And Frank, from your side as well, what are you seeing when it comes to trade finance documentary process? That has been one which has been fraught with problems over the years. And of course, we do talk about trade finance. It really is about documentation, documentary credits, exchange of documentation. Where have the advances been there, and where have the blockages been when it comes to digitalization?
Yeah, I think you said it actually. I think it's the harmonization, obviously, and more importantly, we have digitalized in the past a lot of more the workflow, the process. And what we didn't do is actually going to the instrument level, be it bill of lading, promissory notes, certificate of origin. This is all still more physical. We do digitalize it by PDF and forward it, but it's not really at source. So I think that is one key component, which in a sense is the sharing of this document makes a big difficulty. So with the, let's say, blockchain obviously can play a key role in this, as you can obviously share this same data, which is very important for the funder, but all the other trade intermediaries. But I mean, of course, the digitalization has the funding side, which is let's say the electronic bills, electronic bill of exchange, promissory notes. But we need to obviously have the electronic trade underlying documentation attached to it. And going back to the model law, that is now something that is worked on. Just on the working group in Germany, and the G7 actually now are clearly on the road to adopt it. The UK is in consultation to bring actually the law into practice, which in common law obviously will play a role. For Africa, when I talk to Uncitral, and Uncitral is the author of that model law, unfortunately Africa is very slow actually in adopting it. So there are discussions on the governmental level, do you want to adopt it? And it's not clearly understood, to be quite precise. And that's not only in Africa, by the way. This is going also in Europe. But this model law can actually do. Now, the ICC has quite nicely now put out for the G7 and the economic benefit. And that is so significant, especially in the pan-pandemic area, to get back on the growth level. And the numbers are quite staggering. The forecast from ICC is additional trade until 2026 of 9 trillion in the G7 only. So if you would digitalize properly. And that is a number now you can obviously look at what does it mean for Africa. And I think from that perspective, I believe the governments need to understand what it really means for the SMEs in particular. When they get liquidity and they can reinvest, that is what growth is. That's when growth happens and nothing else.
Absolutely. It's interesting you come up with that figure of 9 trillion. I mean, that's about 6 times the level of the total trade in Africa. So what it can unlock is incredible. But I think you get to the point there where we have some of the problems, because there are some great processes for sharing information, but it's still the question of using PDFs, right? You know, PDFs aren't the greatest, should I say, technology when it comes to security and people messing with that sort of documentation, but we're still at that stage at the moment. I wonder also, maybe Jack, just to get your view as well on things like e-certificates of origin. I understand there's been some progress there.
Yeah, so e-certificate of origin has moved, towards becoming digital. And many countries now, with the help of, SADC and other bodies, are now implementing the e-certificate of origin. However, the problem remains, you can't do an end-to-end because you have issues with e-signatory. So the end process remains that after taking on all the applications and processing it and so on and so forth, you still have to print it on a piece of paper and sign it. So gradually now this has been, addressed by many governments, and legislations are being passed, and in many countries, but it's slow. It's a slow process, but at least, about 70% of the process is now, electronic. So hopefully, with the COVID factor coming into play, and recently with the COVID issues affecting all of us, EU certificate of origin, for EU traders, they have started accepting the e-version. So they are issuing electronic certificates of origin with signature. So that has moved quite fast in Europe, but I hope Africa will catch up also, so we can align with this process 100% electronic.
Yeah, I think that's great. And it's very good to hear that we're talking over 60% of the process. That suggests that we're over halfway. So it's now a question of bringing in the laggard section. And Rahul, as well, from your side as well, where have you seen in the whole attempt at digitalization of payments and the process with clients, where have been the most stubborn resistance or the most stubborn problems?
So I'll first break it into 2 parts. So I've worked with 17 governments in Africa. So I've been there for 15 years now. So what I've seen, a huge resistance from the government, I think, as my panelists were also, co-panelists were also saying. But I think that comes from 2 or 3 parts. First is the cost to apply for it. Second thing is, after the application of this thing, what is the education system in the country that they will be able to handle it? Third is that there is a kind of you can say, once you are able to digitalize a particular thing, you're also able to lose controls manually, which you're having today. And there are some of the staff departments which are not very comfortable with that particular situation. So I think these are the main elements because of which there is discussions all across, but a huge amount of resistance from the ground, which the governments are facing in terms of applying those systems or digitizing the entire chain all across. So I think I will start from there. I think because of that inability, and of course Africa is 54 countries. Everybody is having a different maturity. Some of them are not able to also having or nice control over the manual processes. So you need to first probably stabilize those, then standardize, and then digitalize. This is probably the way to go for it, and which is where probably we have different sections, which is where we are facing a lot of problems. So in terms of payments, in fact, many countries have, when they applied even as simple as thing as mobile wallet or bank wallet, digital wallets, they face a huge amount of frauds, which were crippling for some of the banks, and they had to close their businesses also in many of the countries. So I think the kind of fear of unknown and not also and they're able to work without chains being digitalized. I think these are some of the basic reasons on the ground. So once I got on this panel, I actually came back to my African friends and I asked them that why not? So they're saying that we are happy to have digital in our places, but we're not happy to probably lose money in terms of frauds or probably the unknowns. I think these are the amazing basic reasons why we are facing such an amount of you can say resistance all across.
No, it makes sense, and I understand as well. I mean, you look at many different companies. If you are in charge of risk, if you're in charge of protecting the company, the last thing you want to give up is another control to some algorithm or some structure that you're not happy with. And of course, there are vested interests there as well. You know, I mean, we talk about fraud, but fraud is actually also probably the income for a percentage of people who work in the value chain as well. So, you know, we are coming up against the vested interests of people. They have a vested interest in fraud as well. And of course, it's got to be a slow process. But I like the point you're making up there that we, in fact, have to digitalize the process from below, not necessarily from above. We have seen many examples of this when someone comes up with a wonderful solution and says, now can we hammer that onto the value chain? Probably has to come from below. Well, talking about the technologies as well, which come in here, we have heard about blockchain, and I agree that is the perfect technology when it comes for the transfer of trust. But actually, we need to think about other technologies which actually enable connectivity to it. And that's why I think the cloud is so interesting. And I know a lot of you are involved in cloud services, but the thing about cloud services, which people don't maybe fully understand, is that if you only go back 10 or maybe 15 years, if you were a big company, you might be a bank, you might be a trader, and you wanted to be able to control all of your information, you would need to install hardware. You'd need a mainframe, you'd be bringing in huge amounts of equipment, you'd be bringing in all the software, a lot of it had to be bespoke, you'd have to train yourself up. Nowadays, if you've got a good internet connection, which isn't always easy actually in Africa, but if you have a good internet connection and a laptop, you can connect to the power of the planet through cloud. And there's huge possibilities when it comes to cloud services for scalability, affordability as well. So I'm just quickly interested to know where each of you on the panel here can really see the benefit that cloud services can bring to the trade value chain. So maybe if I could start with you, Frank, on that one.
Yeah, I think you described fairly nicely the benefits of the cloud, which we have had for a long time. In trade, obviously, it is the key solution for most fintechs in particular to bring their services to market. We see also a combination between blockchain, which is more the immutability, the traceability, and the cloud solution, right? I think in the end of the day, it makes it the world flat. We all, if as long as you have been onboarded, the other topic, you can have no access. And obviously, the most important thing, which is at least in the nirvana, in the end game, let's call it, obvious, which we have seen in the consumer side with Google, where basically the new oil is data. If you would have the cloud-based solution, you can actually gather data on a very large level, which you then can distribute again, which is actually maybe a future business model to sell those data, trade risk data, back to financial institutions or players in general. Obviously, the problem with that is maybe that, of course, for regulatory reasons, banks have to have their own data and have to show control of that data. So there is some work to be done, and that's probably not only in Africa the case, it's globally the case. How can we actually make this data in an aggregated way available and then feed it back to the respective protagonists in trade finance? So there's some work to be done, but it is a massive potential. In particular, but not because only that I don't need to install. I think the biggest potential is that the data is coming together. And the data can then be shared. If you look at the ICC register, how much manual work this is and how incomplete it is, and maybe not even fully representative. So that these are the topics I think that can create great value.
That's great. Thanks very much. I wonder, Rahul, if I get your views as well on this one as well, particularly in terms of the impact that cloud can have on the value chain, and particularly addressing this question of cost, because a lot of this technology is actually expensive unless you can scale it and unless you can find a cheap way of connecting to it.
I think very good point which was made by him, that I think data. I think we are forgetting the basic thing. I think digitalization is one part of it, but data is the major part of it. In Africa, the amount of data that is being right now accrued in certain parts and certain pockets is just massive, and this is not getting used or utilized by many, except for a few. I think that is something which is very important, and this data itself will be also the reason how the regulatory bodies of those countries are able to decide on the regulatory frameworks for data sharing between their countries and other countries within Africa as well as globally. So I believe that this part of technology is extremely important. When you come to the question that you asked, that, okay, cloud, how can we better use cloud? I think right from fintech to the entire supply chain today can be housed onto a particular cloud. We can have regulatory frameworks, exchanges across to it. Price transparency can be there. Business transparency can be there, which can be achieved because of this. And then we can also give the data back in specific form and fashion to the consumers, ultimately, for them to be also better, you can say, informed while taking a decision on their choices. So I think, and for me, my company is in end-to-end. So we are from farm to fork all together. And cloud is one of the basic things that probably we depend upon in a large way. Blockchain, of course, is the other one, but it's very expensive as well. But then you come across in Africa, you see cloud being extremely doing well, right from the payments for the small farm holders to the major data housed for us. I think it's really important. Yeah.
Thanks, Rahul. If I remember, Olam used to describe themselves as seed to shelf rather than farm to fork. Seed to shelf, indeed. But what is it? Paddock to plate, etc. Lots of other ways, and pit to port, naturally. I wonder if I get your views as well, Jack. I understand also that you've been doing some work on a logistics single window, which is to do with cloud. How does that work?
You see, with the cloud technology today, it actually reduces considerably the cost of implementing a platform. So it gives access to medium, small companies to not have to set up infrastructure, which could be very costly in terms of servers and backups and so on, DCR and all that. So today with cloud, like we are a company, we're born out of cloud. We've put a lot of systems. We host a lot of platforms on the clouds from Singapore and around the world. So just to round up on the cloud issue is that, it's cost benefit, it's efficient, and it allows a lot of small, medium enterprises to connect and use the systems. Now, coming to the logistics single window, you see, it actually is the movement of goods between exporters and importers. You have a lot of processes, a lot of stakeholders that needs to, be connected, be data interchange, and have their services to allow you to move, your goods from one end to another. So those are freight forwarders, transporters, airlines, shipping lines, warehouses, and ICDs and so on. So with a logistics single window, which is the main benefit is it harmonizes the data. So only one data entry is an entry point. So all the stakeholders will get the relevant data, which is actually put on the single window, which allows them to carry out all their services, online. So the time when people used to have to go to visit somebody's offices and, get a contract, sign a contract, and so on, this is now done electronically on a single window. So many countries in Africa, they're also landlocked. So the costs of doing business in exports could be very costly. So now with the single window of logistics, they can actually do from their offices. They can actually trade with somebody in a different country, in a global place. So they can actually send file the papers, the permits, the certificates, and so on, which is taking care of costs of doing business as well, which is a major benefit of using single windows and the digital platforms. So truckers and carriers and so on also benefits in terms of new business opportunities that this creates for them by moving goods from country to country, and especially in landlocked countries where they have to go to a port, which could be many miles away. Often when they have to book a container to shift from an exporter to an importer, they have to actually, it's only a one-way kind of booking that the carrier will charge them twice the amount. But with a logistics single window, whereby, the other side of the coin can also send a container back to the country of origin. So it actually creates more business. It allows more, connections between players in different countries and so on. So overall, it reduces costs, it increases competitiveness, and it's, the main thing is it actually overrides the issue of corruption and so on. So this is what logistics single window can do for you if you use it to export and import your goods.
That's great. Thank you, Jay. I think also that really gets to the central point here again about data. If you have the right data in front of you, you are able to make decisions. You're able to do the different transactions as well. I wonder also if I get your views on this one, Andrew, as well, when it comes to the cloud. Yeah, what do you see as the key use for that when it comes to value chain?
So actually, in the previous panel, Bob articulated very well one of the challenges around the cost of onboarding compared to the potential revenue from the customer. And it's not just that cost of onboarding, it's the cost of production of that trade finance instrument for a bank. So the issuance of a letter of credit or handling the document checking, a document handling process is very expensive. It's very time consuming, and that cost goes on to the customer. And in fact, the cost of providing this is often means it's prohibitive for the bank to be able to provide this business. If we look at the numbers in Africa, we see banks reducing down, the number of banks are reducing down, they're offering trade finance, and it's the amount of banks that are still handling this business manually is quite amazing, really. And the amount of manual processes, the amount of physical document handling means it's a very expensive business. It's a very low margin. It's not very profitable. So the cloud, as we say, can bring down the cost of providing that system. But it's also about how we provide that system on the cloud. Traditionally, the business case to invest in a new trade finance platform to digitize their business can be very difficult to get through. It's a high capex spend, a high initial spend on the software, initial spend on the development, the implementation, the software and the people to support that. Actually, cloud allows us to provide our software in a software as a service model. So actually from a subscription basis. So turning it from a big upfront capex spend into a monthly or annual OPEX spend, more closely aligned to actual profitability of your business. So you have this regular, repeatable cost to provide that system. Things like staying up with regulatory changes. I'm sure a lot of banks here which have software systems have invested very heavily in the recent SWIFT changes, just to stay up to date with the SWIFT messaging standards over 2018, 2021. I mean, those costs have gone into the millions for a lot of banks. And we don't know what the next regulatory change might be. We know there's some stuff going around ISO, but we don't know where that next big spend will be. In a software as a service deployment, those kind of changes are part of the platform. You get those as you would get your updates on your iPhone. You don't need to worry about those. So you can kind of manage your spend. And this kind of model allows banks to go back in to offering trade finance business. They can afford now to digitize, reduce down that cost, and be able to offer this to their customers as a business.
I think that's a really interesting way of looking at it as well, because so often the discussion is about we have a difficulty of getting the client on board. If anything, it's the other way around. How do we get the bank to be able to actually do the lending? I certainly came across this myself when I was working in banking. So many discussions about we want to lend to SMEs, but we just can't. We really want to lend to them, but we don't have the information or we can't afford to onboard them. So that could be something that breaks it. Well, you did mention regulation there, and I think this moves on nicely. But just before I do, there's one follow-up question which was submitted by someone from, sorry, just get into the question here, from someone online, which is about this question of cloud. And it really is a question here, is that who will guarantee against breach or fraud in cloud management? Anyone want to take that one?
Okay, so the cloud service providers themselves are seeing the value of providing to financial services. So there's a lot of work's been done to ensure that they have financial service grade cloud security in place. There's been a recent announcement, I believe IBM Financial Cloud has announced they've partnered with a lot of banks in Africa to provide the services. We see Microsoft, we see Azure, AWS, all focusing on making sure that they provide the requisite level of security on their platform to meet the scrutiny of financial regulators. The second side of that, again, it's got to go back, I feel as though I'm repeating myself a lot, the regulators need to put in a digital framework in order to support financial services as well. So they need to provide that surety to banks that the law is in place to support them should they move on to those cloud platforms. So it's on both sides.
I think that's very good, and that brings us actually on what I want to discuss, which is about this question of regulation, because there have been a lot of, there's a lot of international regulation which is out there. Obviously, if you are dealing with any financing involving dollars or euros, you're going to be subject to US and EU regulations as well. But as you said, within the countries themselves, that's where it's important to have regulators who are open to innovation. So if you could put up the poll, please, if we could do another poll now, I would like to ask everyone, in which region of Africa do you feel regulators are most open to financial innovation? So is it North Africa, West Africa, Central Africa, East Africa, or Southern Africa? And again, this is in your own experience as well, but where do you feel the regulators are most open to discussion and implementing financial innovation? Please go ahead and vote. Well, we would expect East Africa to be high up there. Okay, good to see West Africa's making a shot. Oh, actually, we don't seem to have Southern Africa on there. Little bit of prejudice, maybe. Tell you what, if you want to vote for Southern Africa, vote for Central Africa, okay? Why don't you do that? And we'll take that as a proxy, and apologies to any Central Africans here. Surely understand. There we go. That's more like it. Yes. I think that would be pretty much exactly aligned with how I would have said it, Southern Africa and East Africa. I just wonder if we can get some views from our panelists. Does that fit with what you think? And also, where do you see any examples of African regulators really being open to innovation? Maybe if I could start with you, Frank.
Yeah, I think it's not a big surprise indeed. I mean, especially when we saw that Central Africa absorbed Southern Africa. When we get from 0 to whatever it was, 50%, I think. I think I'm not necessarily the perfect respondent to it, to be honest. But I think it is well known from my experience that in Eastern Africa, let's see, I had a lot of exposure to Kenya, that the regulators are, let's say, they understand what is actually going on, and they have, let's say, how shall I put this? There's a lot of educational background on it, which comes from within Kenya, but also from outside. That is definitely a big benefit in this regard. And obviously, Southern Africa, we know that's the flagship very often, as we know. And then you have Western Africa, and of course, Northern Africa, as you sliced the dice, I guess. And I think the same experience here is that it is something which I would say, even in the traditional sense, there are struggles. And now digitalization comes in, and that is, I would say, adding to the struggle, probably, although the potential to leapfrog, ironically, is extremely high, right? I mean, there's a huge amount. So I'd say, I think there needs to be, my personal opinion is more from the international standardization, regulation, much more coming in, and from top down to help. And that's, I think, what we see starting to happen. Hopefully, the adoption is there. So far, I have not seen that and heard that from what I have been hearing from some of the NGOs responsible for it.
Sure, thanks. And Rahul, from your side as well, because obviously Olam has operations all over Africa, the largest trader of cocoa, palm oil, rice, and any other number of things as well. A lot of these digital innovations you're trying to introduce are for cross-border value chains. So where have you found the most openness among the regulators to the kind of innovations you're introducing?
So I think East Africa, I was not very surprised with the thing, but I think North and West, some parts are missing. But I think Ethiopia, Kenya, Rwanda, South Africa, even the north, above the sub-Saharan Africa, plus a bit of Nigeria, will be, I think, the countries which are, let me say, they understand better about what is digital. They are more open to probably experimentation and more open to innovation. And this is very true because we can see a lot more innovators, entrepreneurs coming up from Nigeria, from digital, from Kenya, who are working on these digital initiatives, and they are coming up with a lot of solutions to, for not only the local population but also for the corporates as well, to bring various on the fintech side. So I believe a lot more. I think these governments are used to these kind of you can say understanding on the digital side. Yes. But I think, as Frank is saying, I believe that some countries, for example, towards West of Africa, whether it is Cote d'Ivoire, Ghana also probably is one of those which understands well. But Nigeria, Ghana, Cote d'Ivoire, these are very heavy in terms of the commodities. So they have to, and somewhere or the other, probably come up and shoulder-to-shoulder basis with the East Africa.
Absolutely, yes. And Andrew, your own views on this one as well, in terms of the regulation.
Again, the countries, Kenya, South Africa, Nigeria, these countries very much kind of leading the way. Huge amount of investment around fintech happening in South Africa, huge investment in infrastructure around high-speed internet in Nigeria, all of these things. You need to have these frameworks in place in order to embrace the digital economy, and the regulators seem to be coming along with them, supporting it, yeah.
That's great. And Jack, anything you'd like to add on that front in terms of the openness of regulators to innovation?
Yeah, lately, countries like Chad and Togo have been very much involved, with us in terms of commodity kind of platforms, and they are kind of relaxed in terms of, doing the business on the next topic, which is the marketplace. So, yeah, Southern Africa and East Africa, they've been leading all the time. But I think now the Central African countries are now coming up, in the same league.
Absolutely.
I think it's very important to probably mention that there are 3 or 4 big projects going on all across Africa. So whether it is To Africa by Facebook, you have the Equito by, I think, Google, and then you also have Peace by China. So if you see altogether, there are 48 countries out of 54 countries which are talking to one or the other corporate powerhouse or the countries in terms of digital movement, starting with internet.
Absolutely. And I think the other thing to bear in mind here as well is that there are, we've seen very strong progress. I mean, South Africa itself has been a hub of digital innovation for many years. And in fact, it's been possible in South Africa for probably 20, 30 years to send a text somewhere and then go to a cash point and get out cash, like digitally sending money. They've had that for many years. Obviously, in Kenya, they had visionary government, visionary central bank governor who pushed the whole M-Pesa innovation 13 years ago, and since then it's grown as well. But I must say, I've been very impressed by West Africa in recent years, and in fact, particularly Francophone West Africa. I'm currently working on a project with the African Union and Smart Africa on a digital economy index. And Cote d'Ivoire is one of the leading countries there. And they are remarkably advanced when it comes to their digital strategy and what they're planning to do. Because the thing I've realized about the project is it's not so much about, is there a digital strategy, is there will, it's, is there coordination between all the different ministries who are responsible? Because as soon as you start talking about a digital economy, a digital market, is it the Ministry of Economy? Is it the Ministry of ICT? Is it the Ministry of Statistics? Who owns this data? Who is actually driving it? And so I think actually I see personally as one of the biggest challenges there is getting the coordination of the different parts of a specific government to be able to actually implement a digital strategy. Because one of the issues we've been coming up with in the project a long time is, I'm sorry, I need a letter from you so I can get the permission from that person to get that ministry to give me this thing. And that, I think, is one of the big things holding it up. Well, we're almost out of time, but there is one question I'd like to ask, because I think it ties in with one of these perennial problems that we have that we're trying to solve, which is getting financing to SMEs. There is a new generation of tech which is out there. We've talked about it being more affordable, more accessible, making it easier to onboard people and clients who maybe not, who we may not have as much transaction from, but it would be worthwhile if we could scale it. So what kind of new tech are you seeing out there being deployed, which is really helping with this issue of actually onboarding SMEs and getting finance to them? Who'd like to lead on that? Andrew.
Well, I think we've touched on it a couple of times. One of the biggest problems with financing SMEs is the lack of creditworthiness, the lack of kind of financial information about these companies in order for them to meet the regulatory requirements that banks have to go through in order to offer them financing. Adoption of eKYC solutions, getting corporates onto digital platforms where they can start having traceability of their transaction history and starting to understand their trade flows and payment flows, etc., like that, and using that data as a source to provide the information to banks and regulators to be able to offer financing, I think is a very important step. So again, getting that digital, that road, everyone on those platforms, getting that moving, getting that data there and sharing that data, being open with that data and being able to have a common standard around that data and be able to share it between the banks, I think is a way of moving forward.
That's great. And Rahul, I would imagine for Olam, most of the members of your supply chain and value chain are SMEs in some ways. What kind of tools have you been using to really try and address this issue of the finance to SMEs, which is so difficult?
So I think the same question I was discussing outside also one of the bankers as to why can't you probably do better, even though I know the answers. I think the first thing you went was because, we have risk parameters, country risk. So the moment he said that, I said, okay, I think the conversation is over because the entire Africa has the same rating. So then I told him that I think digital, I think the one thing which you can probably use is tech. Creditworthiness is very difficult. People who are actually, so when I go to farms during my previous roles, I used to go inside the bushes where there is no road, there is no mud road as well. It is all bushes all across. I can't go with my own car. I have to use a 4x4. 16 kilometers inside, and then there's a farm with probably 50 people all together there. It is difficult to probably get creditworthiness from those guys, but they are doing businesses which are into probably some few thousands of dollars on a regular basis. So I think one part is creditworthiness, which probably will be done if they will be able to start using banking channels, which is still very rare. Olam went through a overhaul. We said that we will not use cash. It took us 3 years in many places to become cashless completely. But we have seen the journey. So when we were onboarding, so we said, okay, you can't onboard the clients directly. Why don't you onboard them because of us? So we were able to give them the contracts, use our, you can say, kind of worthiness, and then onboard clients to us. So I think we have onboarded roughly, if I'm not wrong, 16,000 farmers altogether, only in a single country of Cote d'Ivoire, which you were mentioning about. So those are now there, and they are now on a regular basis having a history all across. I think the banks, I do understand the predicament. I think I've discussed with Andrew before also on this point that unless and until they have a certification of the worthiness, how can they give it? But in our experiences, last 5 years, I can tell you only in Cote d'Ivoire, Ghana, Nigeria, the biggest part of the businesses, it is 0.2% is the kind of losses that we are seeing. And also in those cases where people are either looted or they are either shot down, unfortunately, because of XYZ reasons. So those are the places where we have seen losses. I think if banks are able to work together with the large corporates, are they able to probably get the data which those corporates have been able to gather over the last 15, 20 years, I think it will be a win-win combination on both the sides to probably work with the farmers. I think that's the only way I see forward.
Absolutely, and I think it's so interesting here as well, because what you're actually talking about here in some ways is transferring the trust of Olam to your suppliers itself.
And the data.
And the data, exactly. And of course, it comes with it. But I guess it's in the broadest issue. It's like, we trust them, you trust us. Can we transfer some of that as well? And of course, you've got to have the necessary data in order for that to happen. I wonder, Jack, if you have any views on this one as well, particularly how you're seeing technology helping with this issue of getting financing to SMEs.
See, we are involved, in our platform, we do a buy, ship, and pay model. So on the pay model, the financing, normally on our e-marketplace, which is a platform which we open up to farmers in hinterlands where, they don't have access to technology. So we kind of give them some kind of security with blockchain kind of technology. And that actually gives the banks, the funders, some kind of guarantee that those people, are safe to work with. Now, we actually work with many banks across Asia, on the pay model in the implementation of our platforms. Now, SMEs are very important to us. They contribute hugely to the economy of our countries, and they are the one who actually employs most of our people. So I think we're coming up with a kind of model where we're working with government, with the private sector, and obviously helping the SMEs to actually start using digital platforms to trade, in various countries across Africa. So we also into the funding and the financing model, which we will bring on the table when it comes to setting up trade platforms, which we call e-marketplace. Now, we've done that successfully in Singapore, where we have built and we're operating today the only seafood exchange platform, which connects all the producers of seafood, from any corner of Indonesia to Vietnam and China, and they actually can come and bring their produce onto a platform, which they can actually open up to many buyers across the region. So we are, as a company, we are fully aware of the need to bring technology to farmers, and we are helping a lot of farmers in Africa in so doing. Now, coming to the e-marketplace, now currently what we're doing, we are connecting various e-marketplaces from various, like today I'm in Mauritius, we're talking about connecting a seafood exchange platform to Singapore from Mauritius. So yes, we are supportive, and we understand the issues faced by the banks, the lenders, and so on. But hopefully, with technology and what we're doing, we can help alleviate the problem.
That's great. Thank you. And Frank, maybe a few final words on that.
Yeah, our experience was with a trade trust service provider, basically between European importers, in this case, aware about nuts from sub-Saharan Africa. And the trade trust service provider it basically makes sure the product is in the high quality, the farmers, the cooperatives are all aligned. And the big problem that the trade trust service provider is actually the funding side, the trade finance side. So what we did is we enabled him through an electronic promissory note that the buyer in Europe was issued to him, right? And the credit risk is over there. And he basically has now a negotiable instrument, a transferable instrument, which he can sell to an investor. The investor sits in London. It's a trade finance fund. And at the same time, because the trade trust service provider has intel on the trade, and the bank knows that this trade trust service provider knows also the eligibility and the truthfulness of the trade. The funding also from the trade trust service provider who issues an e-note to the farmers, which then can be discounted and transferred. The liquidity flows actually from, based on the credit risk on the European buyer down to this downstream to the supplier. That's what we at the moment are doing in the first stage, and trying to scale it up a bit, because we believe that this is something where you basically combine the dots between a buyer in Europe, relatively large, down to the farmer, which is, I think, quite interesting.
Excellent. And using the documentation and the transfer of trust to do that as well. With trust comes money, I guess you could say. Yes. So thanks very much. I'm afraid we are out of time. There are other things I'd love to discuss, but I would like to thank very much my panelists, Frank, Andrew, Jack online, and Rahul as well, for a really interesting discussion. Thank you very much, gents.